Kenya is a leading destination for startup funding in Africa. However, not all startups stand the test of time. This week, we speak to East Africa Venture Capital Association Chief Operations Officer to find out what it takes to build a sustainable startup. This is She Means Business. I am your host, Claire Munde. Jacklyne, there's usually a lot of talk about pivoting and how people can move from one career to another. Now, you studied education and now you're in the world of venture capital funding. Tell us, what does pivoting look like, and take us through your journey?
Thank you, Claire. Very interesting. I usually, take stock of my journey, and I find it quite interesting even for me to recollect and think of how I got to where I am today. And I'd say it's been a journey of determination, a journey of resilience and continuous investment in, personal development and growth. So I studied education, English literature. I was meant to be a teacher, but I felt compelled to do something more to contribute to the society in a bigger way. And not that I hate teachers or I hate teaching, but I just felt like there's something else that I could do. And, as they say, whatever you, vividly imagine and act on it, it shall come to pass. So I guess that's the path I took. So as soon as I started my undergraduate and figured out this is not where I wanted to end up in the future, I immediately started working on my plan B. So going through my education, graduated, but by the time I was graduating, I already had a plan of what I do not want to do. And that was, I did not want to go to a class to teach. That's all I knew, and that was my motivation, my driving force. So fast forward, graduated, started looking for jobs in the corporate world, ended up starting very slow, as they say, start slow and build on it. So that's how I started my journey. Started very slow, doing data entry, moved to customer experience, customer executive service, and then from there is when now I just pivoted into venture capital. And it was not easy. I did not know what venture capital was, but I saw an opportunity, applied for a job, and I got the job. And so first thing is, when you're in such kind of situation, it's very hard for you to, feel the sense of belonging. So I did not have that. And I decided to lean more into what I already know. So look at what am I good at, what do I already know, and just leveraging my special skills and talents to maximize the opportunities that were around me. So it was very interesting. There was a lot of jargon in the industry, people talking about things that I do not understand. So I used to just note it down. Thankfully, I discovered Investopedia, which was my first teacher. So everything I hear that I do not understand, I just type it in and, learn, research, do my research. While at it, I now went back to school and did Masters of Science degree in project management. So with that now I was able to build on the skill sets that I'd already identified. I do not have, remember, I'd already come from different industries, having exposure in different industries. For my customer service work, I did it in an automotive space. So I kind of had an understanding of how different business worlds work. But in order for me to now comprehend a lot more and move from where I was to where I wanted to go to, I had to now go back to school and do this degree, which was very helpful. Aside from that, I also relied a lot more on, online resources, online research, asking questions, having mentors, learning by observation as well. And that is the easiest way that you can ever learn. So identify a few individuals, including my colleagues. So identify people that, I can go to with the most silly questions, and they'll be able to explain in a layman's language that I understand. So that's, in a nutshell, been my journey. And from there, I never stopped, I never stopped my personal development work. So I'm always doing my research. I'm always investing in personal development, basically just using everything around me to maximize any opportunity that comes my way.
Wow, well, there's three key points that I like that you've talked about there. personal development. So you went back to school. There was jargon, but you said, I'm going to take it upon myself to go back to school. And the second one was the importance of mentors. And then the third is, even when you had jargon, you didn't shy back and feel like, oh my goodness, I shouldn't be here. You went, wrote it down, and then did your research. What would you say to women out there who find themselves in that position where they're like, oops, I thought I would fit in here, but it's like really difficult, technical and things like that. And they start shying back. And you talked about those silly questions. What would you say to that person to grow themselves and not to be afraid to ask questions?
I would say sometimes it takes practice to get over that feeling of, inferiority complex, yeah? And inferiority complex is a killer of dreams. So I would say, as my advice to anyone who feels like they do not belong, just remember that you earned your place at the table. You did not come on a silver platter. And so while you're there, do whatever it takes, if it means having someone to talk to or having, lean into what makes you feel good about yourself, right? I believe that I personally believe everything is possible as long as you're dedicated, as long as you remain focused and you're persistent. I think in this case, the key strength here is be persistent. It doesn't matter what curveballs life throws at you. Just keep going, learn from your failures, embrace change and embrace failure, because failure is a teacher. Also, learn to be comfortable with being uncomfortable. Don't get used to being in the comfort zone, because the minute you are too comfortable, then it means you've stopped growing. So always push yourself to get out of that comfort zone.
I like that. Get comfortable with being uncomfortable.
Yes.
Now, I want us to talk a little bit about the venture capital space and startup space. Now, you are the Chief Operations Officer for the East Africa Venture Capital Association. Kenya is a leading destination for startup funding. Tell us, what are some of the things that venture capitalists look into before funding a startup?
That's a very good question. And Kenya is a leading destination in East Africa, but I was just looking at some reports that are coming out, for 2024's performance, and across the continent, I'd say we've been overtaken. So Nigeria is in the lead now, depending on the amount of funding raised by startups. I think Kenya got about 220 million when Nigeria got over 500 million of funding going towards startup in USD, yeah? But we do have our competitive advantage when it comes to the East African region. And I would say a lot of investment decisions, and especially at this moment in time, are being driven a lot more by increasing interest from investors to be part of impact-driven solutions, right? So you'll see a lot of interest towards healthcare or health tech, a lot of interest towards climate, renewable energy, agriculture, and ag tech, even though fintech still remains a top sector, like attracting a lot of interest, fintech and financial services. And so what are some of the things that investors look for? First of all, they look for, businesses that can they look for sustainability at the moment. Yeah, sustainability is a key thing. We've come from, the industry has been going through a reset, and funding has dried out for some time. And now we are seeing funding slowly crawling back, which means that there's, some positive trends beginning to emerge. And as this is happening, investors are more looking at how can we meaningfully add value to these companies that they invest in. So there'll be the basics that you need to meet, like just being investor ready. And what does it mean to be investor ready? Looking at, do you have your structures in place? Are you solving a real problem? Do you have customers, first of all? And it's very important, even as you consider looking for investors to, invest in your business, for you to first of all look at your customers as your number one investor, because there's only much that investors can do. They'll give you the money, they'll come with the experience, they'll give you the technical support. But at the end of the day, if your product does not resonate with the day-to-day challenges to make someone want to come back, then it's going to be very hard for you to survive. Have proper structures. in terms of how you operate, how does your governance look like, if there's any legal and, compliance that you need to adhere to, then make sure that is very much in order. Your financials, I know when businesses are starting, it can be very hard for, especially entrepreneurs to juggle, building this product, growing a team, and at the same time keeping track on your financial record keeping. So that is also very important. And the minute you put these structures in place from the get-go, it makes it easier even for you to build your confidence when you are approaching investors for financing, and that essentially positions you for success. Also have a team behind you. Don't do it alone. Have a group of individuals or advisors. As a start, you don't necessarily need to have a fully established board of directors, but have advisors on your team who will be then able to help shape your vision. These are people who buy into your vision. They see where you're going, so they're more able to help you shape the vision. They are more able to help you navigate the day-to-day challenges that come with growing a business, including just taking care of your mental health. So it's the small things that investors look for. They look at when you're approaching investors for pitching, how do you package your story? How is your storytelling, and does it resonate, or is it in a way that can make someone or these investors, the fund managers, go and convince the investors that this is a company that we can invest in? Because remember, it's a cycle, right? You have the fund managers who are scouting for these opportunities and deploying capital, but there's also another investors at the top who's the owner of this capital, right? And they have to give a go-ahead before any investment is done. So it's very important for you to tell your story in a manner that you are empowering also this investor to be able to sell your product.
Wow. A lot of interesting points you've put there, and I'd like us to zone down into two things. First of all, you said there's been a reset in funding. Now, tell me, what have been the lessons that have been learned? Because you've talked of sustainability, and in the past we've seen some startups getting the funding and then closing down in a short period of time. So what are some of the lessons that have been learned that inform the kind of funding that is given in the future? And two, you've talked about all these things. You need a team of people to advise you. You need to put yourself and package it together. Then who is the right candidate to seek funding? Can any sort of business seek funding, or is there an ideal candidate and some people should just look for other sources of funding other than venture capital? Because it seems like quite an involving thing to do.
Yes, it's quite involving. And the other thing, just before I answer your question, the other thing that a lot of entrepreneurs get wrong is the assumption that once you approach an investor, they'll give you money next week. There's a lot of processes behind, any capital deployment. There's due diligences that you need to be done, and these things take time. And so for an entrepreneur, always, prepare early, so that you're not approaching an investor when you're just about to sink. And I think those are some of the lessons that have been learned over the past couple of decades that the industry has been evolving and growing. Like, your preparation is key. Have a clear understanding of your business needs. What do you need? Have an understanding of what sort of funding is available, for different businesses. Not all businesses qualify for venture funding, for example. If you have a very scalable business that's growing very fast, perhaps what you need is just debt, and if your business is growing very fast and your revenue is coming in and it's positive, then you're more able to finance this debt. On the other hand, if your business is not growing as fast and you go for debt financing, for example, then you're going to end up struggling with repayment. And remember, in many cases, this financing comes in form of hard currency, so US dollars. So when you take in this form of financing, you need to also understand what is my source of revenue and what currency is it in, and how can I hedge against, the different currency fluctuations, including inflation, including currency devaluation and such. There are other businesses that are more suitable for equity type of funding. So explore the different funding options, and that is a very important, strategy to have in your mind as an entrepreneur who's looking for financing. Have an understanding of the type of investors that are also available and what sort of industries they're investing in. If you're building a climate tech startup, for example, it will be very hard for you to approach someone who's financing healthcare, for example, because those two are not aligned. So just also doing your background checks, doing your research, having an understanding of the different types of investors, and also do your background checks on these investors to sort of understand their contribution to the industry, because that is very important for you to know that you are aligned, so that by the time you're making this decision and when you have clarity of your goals and your business needs, then you are not in a position where, you're forced to make decisions or choices that you do not want. Like, for example, just taking in any form of financing just because it's what was available. So be very clear on your business needs, where you are at, what you're doing, and where you want to go, and who is the right person to help me move on to the next stage.
Mm-hmm. Okay.
Yeah.
Now, as we talk about all this funding, we'd like to talk about work-life integration. And on She Means Business, we like to understand, how do you strike that balance between, this is a very competitive industry that you're in. What would you say are some of the key takeaways for people who are trying to achieve that work-life balance or integration when they're, let's say, thinking of entering the venture capital field?
Yeah, that's very interesting. Everyone has their views around work-life balance, work-life integration. But I would say from my personal experience, the thing that has helped me the most is the fact that, I grew up in a rural village in Western Kenya. And when I got into this world of venture capital, I had to quickly figure out what contribution I can make to the industry, right? So in my, upbringing, I witnessed firsthand some of the challenges that communities face, including lack of access to essential services. You're talking about access to energy, you're talking about access to healthcare, and even education. And so when I got into venture capital, I joined a renewable energy focused fund. And the thing I picked out first, before understanding what venture capital is or why they're even investing in the manner that they do, was the impact they were creating. Because one of the portfolio companies was, something I'd interacted with, providing solar home solutions, so lighting solutions to, marginalized communities where there's lack of access. And so picking from that impact, I was then able to identify how can I contribute to this industry. And by identifying that, it also shaped my purpose. So I would say, for me, work-life integration is more driven around my purpose. And based on the experiences I've had, I've been, they've instilled in me the desire to, empower marginalized groups using human and financial capital to make meaningful change. So that is my purpose: leaving the world a better place, creating change, meaningful change, creating positive impact in everything that I do. So once I found that purpose, then it becomes very easy for me to sort of identify what I can meaningfully contribute to, what I'm passionate about. Maybe I can use the word passion in this case. What I can meaningfully contribute to and I'm passionate about, and it's tied to my work, which then gives me a sense of fulfillment. Yeah. So I would say that sense of fulfillment, and also just being flexible and being adaptable. Learning to take breaks when needed, learning to, let someone else help you where possible or where necessary is some of the ways that you can think of, when it comes to how do I strike a balance between this demanding and competitive space to my life, and also how can I have time for myself and my social life. So having a purpose that then drives your passion, which then makes it less of work, but also I'm passionate about what I'm doing. Yeah. And also just learning to, move with the times as they come, using technology, for example, to make, innovate, make your life easier and more efficient in, your day-to-day execution of tasks. Planning as well is another way to look at it. Yeah. And also just having a community, like for me, I'd say having a community of, I'd say like, for example, for women, having a community of sisterhood where you can share experience, because then it opens up it broadens your perspective and helps you understand that, you're not alone. There's other people who are walking this same journey with you, and also just learning from how they are able to go about their day-to-day lives without losing it.
Okay, now as we wrap up, maybe you could share with us what has been your lowest point when it comes to your career, and what lessons did you learn from that?
Wow. My lowest point when it comes to my career and lessons learned. That's a very difficult question. I've actually never thought about it.
If you've had one.
I've actually never thought about it. But I'd say on a more, I would say the fact that the finance world has been, for a very long time, heavily dominated by men. And so as a woman, trying to find your place, trying to occupy your space on that table that you've earned, it takes twice the amount of work you have to put in and effort, right? And that can really be discouraging. You have to learn how to, think like a man, act like a woman. Yeah, that one. It makes perfect sense. You have to learn how to think like, like the men who are majority of the players in the industry. And if you're not careful, you might easily just give up. You need to be able to have that strong will, grow a thick skin, and also understand that there may be cases where it will take a lot of repetitive action for your voice to be heard. But the question there is what can I do to keep going and not give up? Because the minute you give up, then it means you're not able to empower someone else who's probably looking up to you. So I'd say that has been a low moment in some instances, especially where you find it very hard to navigate such spaces. But thankfully now we are seeing a lot more female representation, and it's something that really makes me happy. Now you go to, forums, and there's more women at the table. There's more women in decision-making positions. And these are some of the things that we are doing at even IAVCA to empower more women investors who are then able to invest in more women-led ventures or, women founders, right? So just doing it's the small things that count.
Oh, thank you so much. You've heard it from Jacklyne Iminza. Have a sense of purpose, invest in personal development, and be resilient. This has been She Means Business. I have been your host, Claire Munde. Until next time, have a good one.